All right, guys, 7:15, so we'll get rolling with the bean harvest. We're going to keep it pretty quick today. If anyone has questions, and always feel free to ask. Go through the normal headline risks that we're seeing, CFTC positions, crop progress, weather, and then quick market recap. So headline news, probably the biggest one here is the strikes in Iran, some retaliation, and then, some of the talks around that. One of the big things is if Iran, threatened to close the Strait of Hormuz, and if you look and see a big portion of oil and fertilizer rolls through there. So, it could have a major impact on some of the global oil importers as well as the global fertilizer market. As we saw yesterday, oil quickly brushed off any risk, traded down significantly yesterday. And then, the grains and stuff on Sunday were called higher, or chances of trading much higher in the market. As we can see, has brushed that off pretty quickly. We still have the Russian-Ukraine issue sitting out there. At this point, it seems like no one's overly concerned about it impacting the flow of grain. We have seen some increases in the Russian wheat crop. The government agency increased wheat production to 90 million tons. I think most of the market's using somewhere between 80 and 85 million tons at this point. And then the last thing kind of in headline news is tariffs. It seems like some of the pauses for tariffs expire here in early July. So we'll need to see how those play out as we get closer to those days. CFTC positions, we did see a little bit of short covering in wheat, as well as some extension of longs in soybeans. Overall, no major moves. The big move we saw in wheat last week, I think that shows you how quick we can rally, but it also shows that, opportunities, when they do present themselves, you have to be pretty proactive and take advantage of those rallies when we do get small short coverings. For now, it seems like the funds want to maintain their corn short and their wheat short, and a little more optimistic on the bean side. Just looking at wheat, they're going to maintain this overall short structure unless something changes, a major change in the world dynamics. The carry structure that's in Chicago wheat and Kansas City wheat is going to keep the funds maintaining that overall short position. And then probably what's going to happen is once the July rolls off the board, they'll probably look to sell the next expiration, which would be the SEP, down to the recent lows we've seen in the July. So this market pays them to stay short. So I anticipate, we'll get some short covering rallies, but it's probably not going to be long lived until, something major changes here. Weekly prices, we got the good wheat rally, some small bean increases, but all of that has been taken back here over the last two sessions. So I think right now KC wheat's trading about 539 after touching a high of 575 late last week. Crop progress, no huge surprises here. Corn ratings were a little below analyst estimates. Some of the areas that had drops are supposed to get rain here over the next 7 to 10 days. So no major concerns for corn and beans right now. Wheat, I think the only thing we've seen is the harvested percentage. As we all know, we're way behind in Oklahoma. We should catch back up here with a dry forecast in Oklahoma. But other than that, the models are showing a crop of somewhere between 725 and 750 based on wheat condition ratings. But I think the market's using 775 or, something closer to USDA at 785. Weather over the next 7 to 10 days, we do get some moisture across Kansas, and then we get some moisture across some of the drier parts of the corn and bean areas, some of the areas that had lower crop ratings. So we should see some improvements going into next week. I think one thing to watch is the 3 month outlook is either equal chances or below for some of our areas. Hopefully we can get some of the July rains to finish off this fall crop that we have. But yeah, some of the spring wheat area as well. If they don't get good moisture here over the next 30 days, they could stay dry and have a smaller spring wheat crop. Corn price outlook, I mean, take advantage of rallies. I mean, as it sits today, the corn crop looks big overall. The carryout is comfortable. So I don't see anything really changing on the U.S. side. There is some dryness in the EU on some of those corn crops, but I don't think it'll have a major effect on the overall balance sheet if U.S. corn can have a 1.8 to 2.0 carryout. Soybeans, a little more optimistic there. I still think, if we have 425 corn, it's going to be hard to get much above 1050 to 1075 beans. But with some of the recent mandate changes and some optimism in soy oil, maybe we can get a rally closer to $11. But the big constraint's still going to be the meal side of that crush component. The demand side for meal, they're going to have to find somewhere to go with it, even with us being up in exports over the last, 3 and 4 years. We've increased the meal demand overall, but where are we going to find outlets for more meal if we're crushing for oil? So, you should expect the crushers to run closer to capacity than they have. Just for the oil component, and then try to flush out the meal to whatever markets they can find. Wheat, 550 to 575. We touched both of those numbers this last week, and we've quickly sold back off here. I think any farmer, at least short term here, if we do see another pop, that was a seasonal kind of outbreak that we normally don't see here in late June. So if we get another rally, I think farmers need to take advantage of it here in the short run. For July 26, 27, I mean, nothing's really changed out there. If you'd sell above $6 wheat for July of 25, I think you'd take a look at 26, 27. I mean, we've had very good values here recently, mostly due to the huge carries that we're seeing in both, July 26, and then all the way out to 27. So talk to your RMA group if you have anyone interested in some of those deferred slots. But I think they're good selling opportunities, especially when we do get a rally on the front end. We should get better values out there in the deferreds. So that's all I have today. I want to keep it quick for harvest. Any questions out there from anyone? All right.
A lot of this global unrest and everything going on. I mean, what are some of the discussion topics people should be aware of? I mean, any major hitting things that are going to drive this market? You touched on a few of them, but is there anything else that guys need to be aware of when talking to producers as they come in throughout harvest?
I mean, I think the biggest thing is, do whatever conflict or issue affect the flow of grain? So the big run up we saw a few years in Russia, Ukraine was due to the fact that could impede the flow of, major exporters of wheat and corn. When we start looking at Israel, Iran, it could affect the flow of oil and fertilizer. But until we see something that actually impedes the flow or changes the demand structure on grain, it's tough to see any of these issues affecting the grain markets in a big way. They can provide short-term fund covering, with some of the exaggerated positions that are out there. but I think those are selling opportunities until something drastic comes in that, makes an impact on the supply and demand for the world.
With that straight, I mean, the possibility of it being shut down, of course, probably more of a driver in corn and beans. I mean, do you believe wheat follows that, or what's your thoughts?
I mean, if we did get the Strait of Hormuz to close, one, it looks like it's very unlikely. First off, Iran imports a majority of their grain and oil seeds through the strait, so all their food and everything is basically water imports. And then if you look and see, their main buyer of oil is China. So, are they really going to close off their main one import area and then their main money flow in oil to China, which is probably one of their biggest supporters? I find it pretty unlikely, but it's out there as a threat. I just don't see it, at least short term here, being overall plausible for them to do in the long run.
I mean, Trent sitting in here as an RMA, does a lot of that help you with the discussion with the producers? Anything else on the local level guys need to be aware of?
Well, I wanted to ask about, we've seen volatility really affect option values here recently. Biggs, I know it takes a lot of world market news to keep volatility up, and volatility gives us marketing opportunities. Unfortunately, here lately, we've seen the market go down, but it also takes volatility to make it go back up. Do you see the market quieting down here anytime soon, or?
I mean, I think as we get through, we still have a big weather market time frame here with July and August for both corn and soybeans. So, I mean, there's plenty of time for volatility, at least, until the crop gets more made. Once we get assurance, and I think you can look at the seasonals and go back and see, once you start getting into late July, it starts to really level off, because then what you have for roughly production in corn and soybeans, and roughly what you're going to have for, world production overall. So I think volatility will be here through the rest of June and into July. And then, once we know what the crop is, either you're going to level out here and then, wait and see what the market does. Kind of what we had last year, where corn traded, around $4 for a considerable amount of time. Then the world dynamics changed, and then the S&D for corn got reduced, and we saw that rally finally, but that took quite a few months.
Yeah, it seems like probably 20 years ago, you had marketing opportunities all the way through December, but I'm with you. I don't think you have that many marketing opportunities for that long. By the time July comes around, you probably, if you haven't seen the rally you want to take advantage of, you're going to be looking for smaller market opportunities to go ahead and get grain marketed.
Yeah, and I mean, when we've put up that chart of the highs for the marketing year, historically, they're put in sometime between April and July, when you have planning issues, weather concerns, and then, as you drift, you have to wait then again until December or January till you start getting the next crop year's inputs come in.